You know, insurance is obviously a vital part of anyone's portfolio from the standpoint of risk management, whether it be for life insurance, tax benefits, guaranteed growth, and protection from the downside. There are several areas of insurance. Many people don't know all the different types there are, and I'll give you a rundown of what I think the future is and what I think where the most opportunities lie. First of all, there's been a phenomenon about guaranteed universal life. That was a life insurance product where people could invest, make a return on their cash value in a tax-deferred vehicle, and then take loans out during retirement, which were tax-free. Upon death, of course, the death benefit would pay tax-free, pay off the loans, and no one would ever have to pay tax on that money. It was a great tool for retirement planning, especially if you were in a higher tax bracket. The thing with guaranteed universal life, however, is it's just that. It's guaranteed universal life, and what the companies would do is would actually guarantee that even if interest rates went down and they could not support the cash value, or in other words, the cash value in that policy couldn't support the cost of insurance, they would guarantee it anyway out to somewhere beyond 100 years of age, some even out to 120 years old. So the worst case scenario is you'd at least leave a great death benefit. Well, guaranteed universal life is really on the downtrend right now, and I'll tell you why. The main reason is because of AG 38, which is called the new actuarial guidelines imposed by the NAIC, the National Association of Insurance Commissioners, who came out with a ruling that says, you know, insurance companies, if you keep making only 2 or 3% on your bond portfolios or those safe investments that you make in order to guarantee these rates of return, you can't really go out and propose a possibility of making 4 to 6%, which many proposals on these insurance products have shown. And now these companies, just like banks, were required to keep higher reserve amounts on hand for the contingencies that they would run out of money before those claims were to be paid. Now they also have to keep higher amounts of money in reserve. So with guaranteed universal life, you're going to see a decrease because companies are frankly not going to want to offer it because they're not going to want to put the reserves away. Frankly, people are not going to probably want to buy it because the chance of having any cash value to use later is almost nil. The areas of universal life or life insurance that I think will grow and increase are the indexed universal life. It's been a phenomenon that's been catching on. With indexed universal life, you have a floor, you have a bottom. In other words, you can't lose money on that cash value, but at least you have some upside. With the indexes or the interest rates being controlled more by the performance of an index, for example, the S&P 500 or the Dow, which both went up significantly last year, you would see indexed universal life making much bigger rates of return on those cash values. And actuarially speaking, because the stock market does have a lot of good up years, even though the overall returns may or may not be good, they have enough good years in the mix that actuarially speaking, they're a lot more sound, requiring companies to set aside less in reserves, helping them offer those products with lower costs of insurance, making them still a viable opportunity. Another area of universal life that has been really catching on lately is a combination LTC universal life. What I mean by combo LTC is it's a combination between life insurance and long-term care. More and more companies are offering long-term care features on life insurance because frankly people are tired of spending a ton of money every year after year on an insurance product that 50% of the time they don't use and 100% of the time they don't want to ever use. Now it's great to have long-term care insurance because it's an expensive proposition should you go to a nursing home. But if you have life insurance, with the minimum guarantee of getting your money back plus a death benefit upon death, even if you don't use it, but having access to that entire death benefit for a long-term illness should you need it, that's a combination people are really falling in love with, and that's a combination that's forcing a lot of insurance companies to come to the plate and offer a great product. So that's the area that I think you'll see more people going into this coming year. The indexed universal life and the combo or the combination long-term care with indexed life. Those policies are becoming more and more popular. Definitely worth a look. And if you consider the annual premiums for long-term care policies going through the roof and sometimes being raised to where you can no longer afford it, you may be much happier with a single premium or even a 7 or 10 year premium on a long-term care / life insurance policy. We could talk about term life insurance. Of course, that's probably not going anywhere. Term life is just you buy it for a certain term, and if you die, you collect. Not a lot of tricks or investment alternative with that. Whole life, again, because of the reserves, whole life has to be guaranteed to endow at age 100. What that means is it's set that at age 100 you will have as much in cash value as your life insurance benefit. With interest rates where they are right now, whole life is expensive compared to other insurance if it's used for insurance. You have to be really sure you need the whole life policy, and typically those would only be used for estate planning situations where you want that coverage and you want that cash value available through age 100. One more life insurance product I'll talk about is variable life. That's definitely going to be on the downtick. First of all, most actuaries are saying that the death benefits and even living benefits on a variable life insurance policy, because the erratic stock market that we've had lately, tend not to look like they'll be able to perform. In fact, most variable life insurance policies have changed the riders or changed the features up to where they're really not as attractive as they used to be. The only upside is if the stock market really gets its legs underneath it and goes crazy, you could do a lot better on the cash value side of variable life insurance. But I think people are a little bit skeptical after seeing the last decade or so, and also considering the fees associated with variable life. So that's my take on life insurance. There are some good opportunities out there. Go in with an open mind, but be careful not to be caught in the trap of zero or no interest rates, and companies having to charge higher rates for that insurance because of their new regulations and requirements to keep more money in reserve.